Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management e-News on this 4th of July week. Hopefully everybody is celebrating the 4th of July safely. So today we thought we'd talk about sort of the tale of two markets. The first half of the year for the S&P 500 was quite a good year. It was the 15th best start to a year since 1928. That is for the S&P. Now, like I said, as a tale of two markets, the market right now is being dominated. When I say dominated, we haven't seen this much domination since the late 90s tech telecom media bubble that we saw then of large cap US stocks. The Magnificent Seven, whatever you want to call them, are just dominating all of the performance of markets. And so since the S&P 500 is a market cap weighted index, meaning the bigger you are, the bigger influence you have on the performance of that index, that S&P's done quite well, 15% or so year to date. But when you look at small caps, mid caps, international, the rest of the market, sort of a diversified portfolio, those other asset classes aren't doing nearly as well as the S&P 500. They're not doing badly, they're just not doing nearly as well as the market overall. And so we are like giant standard deviations away from outvaluation or overvaluation in large cap versus these other asset classes. And so we're quite optimistic about the other parts of your portfolio doing well on a go-forward basis, but we don't know when that tide is going to turn. And so while 2024 so far has been a really good year, it's been a really good year for a relatively narrow part of the market. But we think that's going to, in the second half of the year, sort of broaden out, and we're going to see other parts of the market certainly do well based on what's going on with the underlying companies.
The most notable thing of really the last couple months is the complete absence of volatility. On the index level, market's barely moving. There's definitely a lot of action underneath the surface, but it's the large cap versus small cap battle sort of playing out. And on one day you'll see large caps trade up, they'll give it up the next day, small caps will be rallying, and then they'll give up all their gains the following day. So the market's sort of got this back and forth action going on, but really bullish sentiment is totally effusive now. You can't really find a bearish investor anywhere, whether that's on the retail or the institutional level. So what that should tell you is ultimately prepare yourself for volatility. Of course, we're entering election season, and you should absolutely stay invested. Remember, half of our clients think one thing, the other half of our clients think the other. The truth is neither are really right. The election ultimately is not going to affect the outcome of earnings or interest rates. That's left, of course, to the Federal Reserve, and that will be far more impactful on all of our portfolios over the next couple years than the election outcome itself.
Yeah, so we're about to start earnings season for the second quarter. Earnings in the first quarter were way ahead of what people thought they were going to be, and that'll probably be true in this quarter. And so, the moral of the story is it's time in the market rather than trying to time the market. But we do expect volatility in the months to come. It doesn't mean you should be making any binary decision. It also looks like the Federal Reserve probably won't be changing their decision on interest rates, meaning they'll leave interest rates where they are probably through the balance of 2024. And so, we do think that you're going to need to brace yourself for some volatility because we really haven't had any or much of it, at least in 2024. So if you have questions about your situation or your account, give us a call at the office, 800-743-0988. Everybody have a safe 4th of July.